Hey everybody, welcome back to the channel. My name is Justin and today we're focusing on Phil Town's portfolio, which is the Rule 1 fund portfolio. And if you followed me for a while, you know that I'm a big Phil Town fan. In fact, I took his investing course a few years ago. I read all his books. In fact, one of them's right behind me right here called Payback Time. And if you are a new investor, you don't know where to start, his book called Rule 1 Investing is phenomenal. I think it is the best for new investors not knowing or understanding where to start. It puts a good strategy in place. I am not an affiliate of Phil Town at all, but I do respect him, and I think his teachings are very solid overall. So I'm always curious, what did he do in his fund and his portfolio as of the last quarter? Now he does have a number of different funds out there, but this is the one public fund that we get to see as investors, which is great. In fact, my previous videos I've done on him. So every quarter he has a 13F filing, so we get to see his portfolio, what it looked like, and the changes he did last quarter. And typically in my videos, I go over, his current portfolio, his changes, or the buys and sells, and also I talk about his stock option part of his portfolio, which to me is my favorite part, understanding, what he potentially wants to buy in at what price. Now, this particular video, I'm only going to focus on his stock positions because he bought 2 brand new positions in his portfolio and he added to 3 in his portfolio. So for Phil Town, that is a lot of movement in one quarter, especially when he owns about 10 to 12 different stocks. So I'm going to focus on his stock option portion of his portfolio in a separate video. So if you don't want to miss that, go ahead and like and subscribe to that channel. It really helps out a lot, guys. So let's just jump right into his portfolio and see the changes. All right, so now you see his portfolio in front of you right now. And this is a website called valuesider.com. It is a free website anybody can go to. It focuses on value investors. So there's a number of different investors you can go check out on the website, which is fantastic overall. And they do follow Phil Town, which a lot of other websites don't do, which I appreciate this website in particular following him overall. All right. So you can see his biggest position right now is still cash, 33% of his portfolio, so almost a third. Now that is down about 16% from last quarter, or excuse me, I guess down 6% from last quarter. So he was around 40% in cash last quarter. Now he's at 33%. So still a big chunk overall. If you follow Phil Town, I think he is still concerned about the short term of the market with the inflation that we've certainly seen over the last couple of years. And so he's been very strategic and careful what he's been investing in, and he still has keep that big cash pile in case the market does collapse in the future overall. Now, his 2 buys in the quarter were pretty interesting. So he ended up buying into, I don't know if it's called VanEck, Gold Miners ETF, ticker symbol GDX, and then also Capital One Financial Corp, which is ticker symbol COF. So the Gold Miners ETF is at 2% of his portfolio, and Capital One is only 1% of his portfolio. And then as far as the buys in the quarter, he added to his Tyson Foods position in the quarter, and I did a full analysis on Tyson Foods, so I'll put a link that will probably pop up somewhere in the corner of this video now, and you can go watch that. I go into the meaning, I talk about the moat of the business, and I talk about what I think the value of Tyson Foods, and I think it is at a very good buy price right now. Always do your own research. That's just kind of based on my assumptions, but go check that video out if you're curious. He added to his Sturm and Ruger position, which was I thought was kind of odd because he's been selling out of this. Now this stock in general has dropped from its high, so he must be thinking that it's good value right now. But it only added about 1%, so it's not like it's a massive add to his portfolio. So interesting. And then he also owns Alphabet, which is Google, Huntington Ingalls, which is a shipbuilder. I find that one fascinating. I own that one for about a year and a half. They're the largest company in the United States that builds aircraft carriers for the Navy, so they have an incredible moat But really since the whole March 2020 fall, they've come back a little bit, but not like where they were before, because their stock price was around 300 before. It's still only around 230-ish overall. Sprouts Farmers Market, this is a company I owned as well for a while. A great company, actually. Kind of regretting I didn't hold it for longer. Fantastic small grocery store chain. I think they're only about like a $2 or $3 billion market cap. A lot of organic foods. They source a lot of their products from local farmers as well. I think Philtown's cost basis is in the low 20s on this one, so he's almost doubled his valuation. If you probably factor in the stock options and premiums he's gotten as well too, he's probably doubled his position. Banco ZK was one that he's had for a long time, was his largest position for a very long time as well. It's a smaller regional bank, kind of in the Midwest. The owner of the bank, who's also the CEO, he's been with the company for like 40 years. So he obviously still likes that position overall. Activision Blizzard, interestingly enough, he added to this one. I know he had some calls out there that expired in 2025, and he had those at a strike price of $95. And so keep in mind that Microsoft has offered about $95 per share to buy out Activision Blizzard, so that probably makes sense why he did that strike price at $95. But interesting that he added during the quarter. Now, it did dip down into the low 80s, low to mid 80s, and so maybe he's thinking, okay, the $95 is a no-brainer. I'm going to add to it. I don't know, but that's interesting overall. So that's 12% of his position right now. His portfolio is in Activision. Netflix is his largest stock position. It's almost 20% of his portfolio. So he started buying in when Bill Ackman bought in around, I think, 450-ish was the stock price, and then it just tanked. And then Bill Ackman actually got out of the position, but Phil Town continued to buy in, and then he's held. So he's done pretty well, even though he started buying at $450. I think he was buying all the way down to when it dropped to around $200. So he's doing well in that position overall. Netflix, I think, is a wonderful company, wonderful business. Now, they're in the streaming business, obviously. My concern with them is the market multiple that the market has been willing to pay for Netflix. It's been around 20-ish. And with the competitive nature of the streaming industry, I mean, you're talking about Warner Brothers, you're talking about Paramount, you obviously have Disney in there as well. Apple's been getting into that play too. Netflix has been able to stay ahead of the competition, and their operating margins are around 19-20%, which is absolutely fantastic. However, I am really concerned about that market multiple going down and kind of normalizing over time and dropping into the mid-teens, which would really reduce the valuation of Netflix, in my personal opinion. But as of right now, it's doing pretty well. Phil Town has done pretty well. Now let's kind of focus on his two new positions, and that is this Gold Miners ETF and then Capital One. So let's first talk about Capital One. Now this is a bank, and if we go over to ticker terminal, we can kind of check this out right now. It's at $105. If we look at a stock chart over the last year, it is looks like it's down around 7%. So its highs were around 120. It's dropped all the way down to the mid 80s. Right now it's $105 a share. If we look at a 10-year chart here, you see this massive dip in March 2020 when all the stocks just collapsed because the market collapsed in general around $50. So if you had bought around that time, you've about doubled your position. Now, it went all the way up to almost $170 a share at one point. So obviously, Phil Town really likes this company if he's buying into it and thinks that they're a good value. Now, if we look in the last quarter alone, in fact, let's look year to date here. So the last quarter, it did drop all the way down to, the mid 80s. Not sure where Phil Town bought it. My guess is probably around the 90-ish mark. Maybe even lower. When we talked about his option contracts, we'll kind of see if he has some more put options in there, even potentially call options. You'll find out in my future video there. It's interesting overall. So Capital One, I've done research in the past on them. In fact, I've have a small tracker position. I've had a small tracker position in this company for a very long time. Warren Buffett has bought into this company recently. Michael Burry, I think in the first quarter, bought a bunch of this stock as well. And it's actually a pretty simple business. I think banks in general can be very complicated, especially when you get to the bigger banks like a Wells Fargo or a JP Morgan. There's a lot of stuff going on, a lot of ways they can earn revenue, and they're just very, very complicated. Where small regional banks like a Bank OZK is a lot easier to understand, and I think Capital One is also a lot easier to understand. They really just make money in three different ways. They make it on commercial loans. They make it on credit cards as well. And then the third is consumer loans. Now, credit cards are their majority of their business, as far as that's where they get the majority of their revenue. So almost 50% of their revenue comes from credit cards and the interest that they charge on credit cards. I don't know if for you guys, but when I was back 16 years old, the only company that actually approved me for a credit card was Capital One. So they're willing to take more risk than other banks. But I think what sets them apart from other banks is kind of how they go after collecting the money. If credit cards are in default, or if some of their other loans are in default, they typically do that in-house. Where, say, a Wells Fargo or some of these other bigger banks will just outsource that. They'll just pay a collections company to go get it, and they just get a percentage of that. Capital One pretty much does that in-house. Now, you can probably make an argument that they are maybe taking advantage or kind of sharking, I guess you could say, some people that maybe shouldn't have credit cards or have the limits that they have. But in general, they do have a really solid business. And obviously with credit cards, interest rates can be 19, 20 plus percent. And that is a ton of money. In fact, if we look at their financials, they're a really well-run company that has some really, really nice margins overall. So the trailing 12 months, and this is off Ticker Terminal if you're kind of curious, total revenue last 12 months is $26 billion, which is absolutely fantastic. And we scroll all the way down to their net income, it's about $5.3 billion. So that is roughly 19, 20%, kind of around there. So that type of margin is phenomenal. So it gives you a lot of kind of cushion if things are going wrong. So even in a high inflationary type environment that we're at right now, the company is doing very, very well. Now, if we go take a look at kind of a book value per share for this company, in my mind, that's one way you can look at banks or a company like Capital One. And if we look at the last year, their average as far as their book value per share has been around a 0.8. And right now it's around a 0.81. And so now if we take a look at a 10-year chart, for example, you can see, look at March 2020, completely collapsed down to around 0.3, 0.4, right around there. But on historical basis, over the last 10 years, they've been around a 0.93. Right now they're trading at 0.81. So even now, it looks like on a book value per share basis, it does look undervalued. And banks and Capital One in general, I think a book value per share, makes sense, because what's driving the revenue of the company is their assets of the company, right? They're allowing people to borrow money, which is their assets, and then are able to drive revenue by charging interest on top of that. Another thing is, I noticed last quarter, which is also a positive for Capital One, is they decreased their provisions for write-offs. So they actually think that people are going to default less than what they thought they were originally going to, which is good, especially in this type of inflationary environment. You want to see that. If it was going the other way, I'd be more concerned. And it's been kind of weird. Different banks this past quarter kind of said different things. But from Capital One's perspective, they actually reduced their provision for write-offs. So that is a good thing overall. Now, if you guys want me to do a full stock analysis on Capital One, drop it down in the comment section below. And I might do that in the future if I get enough interest on that overall. But that's Capital One. The other one that he bought in the quarter was this gold miners ETF, ticker symbol GDX. I'm not sure if it's called VANIC or VENIC. You can throw that in the comment section if you know. 2% of his portfolio. Interesting. When I looked into this, I'm no expert in this gold miner stock at all. they don't just invest in gold miners, they also invest in silver, they invest in metal. So it's kind of across the gambit, which I think is kind of nice. You're not just pigeonholed into silver or gold or even metals. They kind of do all those in this particular miner stock. And so that makes me continue to believe that Philtown thinks that inflation is going to continue, and this is a good hedge against inflation. I have a hard time with gold and gold miners in general, or even just investing in companies that are in commodity type businesses, in particular gold. Because how stocks go up and down as investors invest into them, obviously it creates a demand, supply and demand type thing, and stock goes up and down. Kind of similar way on how gas is, right? If the demand is down, supply is high, gas prices go down, but the inverse can happen as well. And for me, I just don't know that we're going to see a lot of investors investing in these type of stocks. I think historically we have in high inflationary type environments, but there's just so many different options out there, and I feel like if you invest in a really great quality company, that can actually be better than investing in like a commodity miner stock like this one overall. But if you know a lot about this miner stock, throw it down in the comment section. You can enlighten us on maybe why he invested in that particular stock overall. All right, guys, so that is Philtown's portfolio in a nutshell for the last quarter. Let's just summarize that real quick. So he still has a very high percentage in cash. Almost 33% of his portfolio is in cash. He also bought a gold miner stock, which makes me believe that he thinks we're still in a very high inflationary environment, and that's going to continue over the short term. And so with this also 33% in cash, it makes me believe that he thinks the stock market is overvalued at this time. Like I said at the beginning of this video, I will be doing a separate video of his stock option portion of his portfolio, which I always find totally fascinating overall, because I'm a big fan of his, and it's interesting to kind of see, peel the curtain back sometimes and really see what investors' thought process is on what they think a good buy price is. We don't get to see that a lot with other investors, but we do for Philtown, which is absolutely fantastic overall. Again, that site I use is valuesider.com. Go check it out if you want to. And if you guys don't know how to value stocks, which is incredibly important when you're analyzing companies, analyzing stocks, I do offer that on my Patreon, which I'll put a link down in the description below if you're interested. It also helps support the channel, and you also get access to my Discord channel with about 60 to 70 other value investors in there as well. Thank you so much for watching. I really appreciate it. I'll catch you guys on the other side. Take care and God bless.